A single, normal paycheck was mathematically enough to buy a comfortable home in the suburbs, keep a car in the driveway, and support an entire family. The math of the 20th century was straightforward. You secured a position on a solid assembly line, put in your 40 hours, and in return, the system guaranteed home ownership and a quiet retirement. But over the span of about 40 years, the rules of that system were quietly rewritten. For past generations, trading hard labor for financial security was a reliable equation. Today, that exact formula has collapsed. We can see the results right now. Millions of people pull in what used to be considered excellent salaries, yet they sit at their kitchen tables reviewing bills with a knot in their stomach, living completely paycheck to paycheck. Modern workers are putting in more hours and generating more output than ever before, even as their actual day-to-day financial freedom shrinks. Why did a system that built the strongest middle class in history suddenly fail the people participating in it? Modern families are losing because they are playing a game with an obsolete rulebook that no longer matches the current economic reality. The first major break is visible in the data. This chart shows a side-by-side comparison over time, a flat, stagnant line for median wages, while the cost of living angles sharply upwards. The first casualty was housing. What used to be an accessible stepping stone to wealth became a walled-off market, pushing entire generations into permanent renting. Then the secondary requirements of life followed the same trajectory. College tuition spiked, and a single unexpected trip to the hospital started carrying a bill that could wipe out years of savings. To bridge the gap between static paychecks and exploding bills, the economy normalized borrowing. Stacking up consumer credit became an everyday strategy just to make ends meet. This creates the debt trap. When the majority of your monthly income is immediately routed to paying off old liabilities, you have zero capital left to build future wealth, paying liabilities. While the middle class battles those rising costs on a static salary, the wealthy operate in a completely different financial environment. Instead of relying on an hourly wage, they focus on acquiring assets. This means funneling capital into investments, scalable businesses, and real estate, engines that produce cash flow whether the owner is working or not. We can see this divide clearly during periods of inflation. When prices surge at the grocery store, working families are punished because their flat salaries immediately lose purchasing power. But look at inflation's dual effect. While it drains purchasing power from the salary column, it simultaneously drives up the value of the asset column. Because the wealthy hold assets, their net worth automatically rises alongside the cost of living. The modern economy is rigged to reward ownership while actively penalizing reliance on a single, static paycheck. Now add a final accelerating pressure to the system: artificial intelligence and automated technology. Modern corporate logic has shifted. Massive companies are deploying robotics and software to generate record-breaking profits while requiring a significantly smaller human footprint. Individuals now compete for a shrinking pool of stable roles, while corporations use automation to achieve a level of output that no longer requires a massive workforce. The technology itself isn't the problem, but it dictates a harsh reality. Relying on a static, unchanging set of skills leads directly to economic obsolescence. The cornerstone of the mid-century dream, securing one safe job and holding it forever, has been deleted from the economy. The era of passive, guaranteed wealth building has expired, requiring a more aggressive and informed approach to survive in the middle class. Mastering the mechanics of money has transitioned from a luxury of the wealthy to a baseline survival skill for everyone else. This diagram illustrates the new required formula. You must take your active income, strictly manage your debt, and systematically feed that capital into cash-flowing assets. Hard work is still required, but that energy must now be applied to understanding the mechanics of money, rather than just trading physical hours for a flat check. The economy is moving faster than ever, and the future belongs strictly to those who can adapt to these rewritten variables. If you want to escape the modern financial trap, understanding how money actually works is the only definitive way to solve the